Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Everbright Securities Company Limited Annual Report. Everbright Securities Company Limited offers a wide range of businesses and services to its clients. At the core of its operations are securities and futures brokerage, investment advisory services, and NEQ and structural financing. The company also provides various financial services such as margin trading and stock pledge, investment banking, and financial leasing. In addition to these services, Everbright Securities offers institutional trading, prime brokerage, online securities trading, equity and debt financing, bullion trading, and overseas brokerage and wealth management business. It also engages in asset securitization and financial advisory services, including stock and bond financing, merger and acquisition financing, insurance agency, and collateralized stock repurchase transactions. The company's services extend to securities and fund asset management, retail securities trading and investment, proprietary fixed income and equity investment, factoring, investment research, prime brokerage and custody, customized financial products and package solutions. It also offers bond distribution, OTC derivatives, market making, and investment consulting services. Furthermore, Everbright Securities engages in private securities and equity investment, nominee, business marketing and promotion, as well as operates alternative investment and PPP business. The company holds motor vehicle and licenses, its support management, commodities broking, and leveraged foreign exchange services. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth in the company can be attributed to several key areas. The wealth management business segment experienced a significant year-on-year increase of 11.6%, while corporate financing saw a 9.45% rise. New accounts opened increased by 18%, and customers' total assets grew by 20%. Margin financing and securities lending balance also surged by 31.71%. Furthermore, equity financing business witnessed a substantial growth of plus 57.06% year-on-year increase in equity financing amount. Additionally, the company's fee and commission income saw a notable 21% year-on-year increase. On the other hand, revenue decline drivers were largely attributed to the equity investment business segment, which experienced a significant 67.43% year-on-year decline. The net investment gains also decreased by 6% year-on-year. Furthermore, the Hong Kong Wealth Management CGU saw a revenue growth rate of -30% to 7.5%. Asset management investment segment revenue decreased by 6.4%, and institutional customers segment revenue declined by 0.4%. Overall, it is clear that the company's revenue growth was driven by its wealth management and corporate financing segments, as well as new account openings and increased customer assets. Conversely, the equity investment business segment and net investment gains were major contributors to revenue decline. The financial performance of a company has shown mixed results between 2023 and 2024. Despite this, there is one clear trend. The net income increased by 21.77% during this period. This growth suggests that the company's overall revenue or sales have improved significantly. However, when examining profit margins, we see a different picture. The operating profit margin decreased from 32.15% in 2023 to 31.55% in 2024, indicating that the company is generating less profit from its core operations. On the other hand, the net profit margin increased from 28.95% to 23.83%, showing an improvement in profitability after accounting for non-operating items. The contrasting trends between net income and profit margins suggest that the company's financial performance is influenced by various factors, including changes in revenue streams, operating efficiency, and non-operating activities. The company's financial performance indicates a positive trend in its operating cash flow. A comparison of the net cash flows generated from operating activities reveals a significant increase from $16,839,780 in 2024 to $3,751,976 in 2025. However, it is worth noting that the absolute value of the operating cash flow decreased by approximately $13 million between the 2 years. Despite this decrease, the company still maintains a positive operating cash flow, indicating its ability to generate sufficient funds from its core operations. The company's debt level has experienced fluctuations over the past year. While total borrowings and bond financing increased by 16.8% from RMB 50 million, 8,163 to RMB 58 million, 600,600. Other metrics show a decrease in total debt, with a 0.7% increase from $240.97 billion to $242.65 billion. Additionally, total financial liabilities decreased by 30.1% from 219,441,101 to 135,491,579. Interest expenses have also shown varying trends. Some reports indicate a 2% year-on-year increase in interest expenses, while others show a 12% increase or a specific dollar amount of $63,640, 2.35%. However, it is worth noting that some metrics are not comparable due to missing data from previous years. Overall, the company's debt level and interest expenses have undergone significant changes, but the exact nature and extent of these changes require closer examination of individual reports. The company's performance can be analyzed based on the revenue growth and asset increase in various segments. The investment trading business segment showed a significant improvement with an 18.51% revenue growth, while the overseas wealth management and brokerage business experienced a notable increase of 18.37% year-on-year in total assets. In terms of regional performance, Hong Kong's subsidiary saw substantial growth in its brokerage business, boasting 142,000 customers and HK $68.3 billion in total assets. The mainland China segment also performed well with a 9.3% revenue growth. However, the region outside of mainland China outshone all others with an impressive 30.6% revenue growth. On the other hand, certain segments struggled to keep pace. The equity investment business segment saw a decline of 32.57% in revenue growth, while the institutional customer business segment experienced a minus 2.38% revenue growth. Additionally, the asset management business segment suffered from a minus 1.04% revenue growth. Furthermore, the company incurred a significant loss of $302,782 in its asset management investment. Management's outlook on company strategy: the management is committed to achieving absolute returns while continuously refining investment methodologies. To achieve this, they plan to expand investment scale, enhance market forecasting, and increase investments in bonds issued by real economy entities. Additionally, they aim to focus on private asset management business growth and diversify product offerings. In terms of risk control and compliance management, Everbright Capital will strengthen its efforts, while Everbright Development will intensify efforts in recovering and resolving existing projects. Meanwhile, Everbright Fortune will serve the real economy and national strategies by advancing strategic placing investment projects and expanding equity investment and other businesses. The company also aims to develop a first-class service-oriented investment bank in China, focusing on principal responsibilities and businesses. This includes enhancing professional service capabilities in investment banking, improving quality and efficiency of serving the real economy, and building an industry-focused investment bank. Furthermore, management is committed to advancing rural revitalization and targeted assistance efforts, guided by Xi Jinping thought on socialism with Chinese characteristics for a new era. They plan to prioritize one-on-one paired assistance arrangements with selected counties and promote substantive assistance actions in at least 4 sectors in each county. Overall, the company's strategy focuses on achieving absolute returns while serving the real economy and national strategies. They aim to develop a first-class service-oriented investment bank and make significant contributions to rural revitalization through precise policies and accurate efforts. The company has made several strategic acquisitions to expand its business and operations. Notably, it acquired an 85% stake in Everbright Fortune Financing Leasing Co., Limited, and a 55% stake in Everbright Pramerica Fund Management Co., Limited. Additionally, the company acquired MPS, as well as several other subsidiaries including Everbright Securities Global Limited, Everbright Securities International Company Limited, Everbright Futures Co., Limited, and EBS Fund Management Co., Limited. In terms of divestitures, the company has sold off certain assets to streamline its operations. This includes the disposal of securities brokerage branches at Dengwei Road, Suzhou, and Xincheng Road, Heshan, Jiangmen, resulting in a reduction from 422 to 211 branches. The company also disposed of listed equity investments with a total value of 43.4, as well as those subject to disposal restrictions within a specific period, totaling 64,516. Furthermore, the company divested its interests in structured entities held by third parties, amounting to 314,379. The company has a history of paying dividends to its shareholders. This practice is evident in various sections of the provided documentation, including page 3, where it explicitly states that the company has paid dividends. The distribution of profits is also mentioned on page 94, with a specific amount of RM bone billion, 307,158,295.66 proposed for dividend payout. The consistency of dividend payments is highlighted by the cash dividend payout ratio consistently remaining above 30%, page 99. Additionally, pages 119 and 120 confirm that dividends were paid, with page 120 specifically stating dividends. Yes in the dividends/buyback summary section. Further evidence can be found on pages 171, 172, 243, 244, 311, and 312, all of which indicate that the company has indeed paid dividends. In summary, there is no information provided regarding share buybacks by the company. However, it is clear that paying dividends has been a regular practice for this company. There are concerns about inventory buildup and supply chain disruption that have been identified in the company's financial reports. One key indicator of this issue is the significant increase in asset impairment losses, specifically due to provision for inventory write-downs. This suggests that the company may be struggling with managing its inventory levels or experiencing disruptions in its supply chain. The fact that inventory write-downs are a concern further emphasizes the potential issues at hand. Inventory write-downs occur when a company recognizes that it will not be able to sell certain products at their original cost, resulting in a loss. This can be a sign of poor inventory management or supply chain disruptions, which can have significant consequences for a company's bottom line. That concludes the financial summary for Everbright Securities Company Limited. Feel free to comment below, and I will be happy to answer them when possible.